The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. A wonderful day to start the week on a Monday. We do that every Monday. Isn't that amazing how statistics work? Boys and girls, I posted the chart for the DAX. As you can see, we had a little bit of a Gartley forming here last night. Now, the news is, of course, all focused on what's going on in Korea and in Singapore with the big meeting there. In fact, I love Singapore. I've been there many times giving speeches, and I really enjoy the city, the Lion City. And boy, it is really beautiful. I don't know if you folks know this, but skateboards and chewing gum are outlawed. There's a lot of others too, but those are just some of the things. The next one we want to take a look at, of course, here is the FTSE. We also had a Gartley forming in that one. He had a really nice ABCD pattern. Whether these are bearish or not remains to be seen. But if this thing doesn't go well in Korea, along with what happened in that G7, I don't think the markets are going to take that very seriously. But that's still a little bit too early. That's the way I look at it. But we'll see. I want to share with you something that was very important to me this weekend. My grandson has just graduated from high school. And they were holding the venue at the Cal Poly University Theater of Performing Arts. It's 3,500 people. There were 14 acts out of his senior class. There were 500 kids in his senior class. He finished number 3, and I think the other 2 people paid off the teachers, but I'm not really sure about that. But he did really well. He has a black belt in karate already at the age of 18. And when he was born on August the 14th of 2000, I began buying gold for him. I'd buy him an ounce a month, sometimes more if I had a really good month. And I continued doing that until gold surpassed the old high at 863. And we held the gold till we had enough money to pay for his education wherever he wanted to go. And he told me, he said, no, and that's the word for grandpa in Italian. He said, I am not going to go to any of the schools that I've been accepted. And he was accepted to the 10 schools that he applied to, one of them which was an Ivy League school. And he said, I am not going to pay that kind of money for people that don't really have a lot to say. So I'm going to go to the local school here at Cal Poly San Luis Obispo and start out in liberal arts, because he is a comedian. He performed in front of that group, 3,500 people. I mean, you'd think the fear of speaking would scare the heck out of him. Folks, he was really good. He received a standing ovation. I think that's the proudest I've ever been in my whole life. Considering my kids and everything, I was in tears. I just couldn't believe how talented he was. And then when I had a chance to chat with him, he showed me how he prepared, and my goodness, he is really a professional comedian. He was really funny, and I never expected that, but that was really something really great. By the way, our guest today is going to be Bill Koval of Koval Analytics. He's been lighting up the tree with his trading, and I wanted to share some of the things that he's doing with you folks because you'll like it. And then there's one other thing that's in the works. I don't know if it's going to happen or not. I just want to bring this chart up to you to show you what this is, and I'm just going to run this by you because it's all experimental. But this is a chart of one of the weather markets in beans. This is a chart, a daily chart going over about 3-month time period. It goes up a lot higher than that, but the bulk of this move is what we're talking about. And we have a potential for a weather market coming up in the grains, especially in corn and soybeans, because of the hot weather we had in May that usually transforms into hotter weather in June or July. And of course, the crop is planted now. Here we are in the middle of June, and summer starts here in a few weeks. So one of the things that we're planning on doing is Rich Anderson, myself, and Cy Monley of Sylvia's Financial are going to put together a trading strategy for trading a weather market. And that means it's very aggressive, and you're going to be buying strength. And these don't happen very often. And when they work, they make a lot of money. And when they lose, you lose a little bit of money because it doesn't work and you're out of there. But when it works, it really works. So if you have an interest, drop me an email. I don't know if it's gonna fly or not. If we have some interest, maybe, but we'll see. But just let me know at larrypesavento@gmail.com, and I'll see if we have any interest, and if we do, maybe we'll follow through with it. But it might not even happen. You don't know. Heck, it's still a little bit early. Now, one of the things I really think is very important, I went over the big stocks that are in the news all the time now, and I've been doing this all for quite a while. I just wanted to show you. The first one is Amazon. You can see we're up at a 1.27 expansion. We have double ABCD numbers up there. So that's one of the ones that is spot on. Another one is look at Microsoft here, folks. This has a monster 3-drive to a top pattern, and you can see the 135 buy pattern on the bottom. That's an absolute perfect one where each of the ratios pulls back at near a cycle bottom. So this should be a topping pattern in Microsoft also. The next one I wanted to show you, of course, is the Google, which is this is really an amazing one in Google, folks. When you stop and think this is $1,100 stock, it makes a perfect ABCD pattern. I mean, right perfectly on March the 30th. Then it rallies up and makes a perfect 61% retracement, comes down, makes a perfect 78% retracement, and now has gone up and made a 61% or 78% retracement of the whole move. Right to the point, $1,145 a share. I mean, that to me that's an amazing thing. So we'll see. Anyway, we'll see what's going on, and we'll move on to that level. Thanks, Basil. He didn't want to go to Harvard, and he didn't even apply. His aunt, my youngest daughter, went to school there. I went to Harvard once, but that was just for lunch. Anyway, but he's a really level-headed kid. I'm just really shocked at how he can handle the crowd. I mean, he's only 8. He won't even be 18 until the 14th of August. That's really, I drove by MIT too. Okay, let's move on to a couple others we want to look at. We want to look at the largest held stock of all, and that is, of course, the Apple. And if you'll put this up here, thank you very much. I have a free lunch at Harvard one of these days. It wasn't free, however. 1, 2, 3 tops to a top in Apple. Both of the relationships are 1.414 reciprocal, the square root of 2. So that is that should be some pretty stiff resistance up in this area right here. And then I also did a couple the larger stocks in the Dow. I'll do Facebook here in a minute also, but look at Boeing Airlines here. We've got the same thing in Boeing Airlines, sitting right at double 1.618 expansions at a possible double top. Now those are pretty important things to pay attention to. The last, I got two more to go. I got Facebook and United Health. Hold on, let me get these done. If I don't get them done here, I will get them done by the break. But you'll see here in Facebook, we got a potential double top at exact 1.27 of the March high. That's very, very interesting. The double top was just $1 away from the old top in January. So we'll see if that's going to mean it. We'll take a little break here. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, the next one we want to take a look at, of course, is United Health. I hope I posted that chart. I believe that I did. Yes, I did. Yeah, I did. You can see here that United Health has a potential double top also at a 1.618 expansion of the April high and a 1.27 expansion of the May high. So these things could easily fail without too much trouble at all, of course, but keep in mind that this is something that it's all probability based. It's nothing more than that. The last one I wanted to show you is probably the highest flyer of them all. Well, no, they're all high flyers, but take a look at Netflix here. We have made a 1.618 expansion up there at that 370 level. We're about $10 below that, but we'll see what happens. Most of this enthusiasm today is based on the fact that the things are going well in Singapore. There was virtually nothing happening regarding the G7 thing and that outburst from Canada and all the other stuff, but the Canadian dollar, of course, got whacked. But that's pretty much normal, and who knows what's going on. It's certainly a different environment than we've had before in some of these markets. Whether that's good or bad remains to be seen, but so far the economy is acting incredibly well. The only problem that I see in the economy, folks, is what we have going on in the debt markets around the world. I've been, preaching that for a very, very long time, but it's speaking on deaf ears. But if you'll notice here, what's been happening with debt over the past 20 years, you can see the mature markets. Those are the ones that we're in all the time. The emerging markets are those Asian and other markets that are out there. But you can see that the amount of money that's out there in debt is just unbelievable. And it's just really, it's a little scary, but that doesn't mean very much if people don't believe in it. And so we'll see. As we take a look here at the long-term Treasury bond market, we want to take a second on that because Bill Koval's wants to be talking about that. And you'll notice here that we've had a 382 retracement this past week. That was exactly off the last 382 retracement we had, which was back in September. As you recall, we were talking about the fact that that was going up with a really steep drops in open interest. And that wasn't just because of the rollover, too, because if it were a rollover, they would be switching from June to September, and they were not doing that. So that was all short covering. And now we're in its midst of a of a question of whether we're going to get above that 147 level again or not. But the key thing to look at on this long-term Treasury bond weekly chart is if you'll look at the top that we made back here in March 2 years ago, you'll notice that there were two 1.618 expansions that were there that lined up, perfectly with the high. And you can see that we had a 3 drive to a top pattern coming in up at that 177 level and change. And that was the rollover. That was that odd month that they had, because if you remember, the old bonds got up to about 166, and then they switched the contract. Something was different in that one contract, and that's what it was, that March contract of that year, and that's what pushed those bonds, to that level. Now the Treasury notes, on the other hand, they had topped earlier. They had topped, way back in another time, and so it's really amazing to see the difference in that, because all they were doing on that rally that we had last year was just making a 78% retracement when the bonds were making a new high. Whether that means much or not, we'll have to wait and see. Since we were talking about the Canadian dollar, I just wanted to bring it up to you to see where we are right now, because this is the weekly chart on the Canadian, and we should be finding some, in other words, this is the Canadian dollar versus the US dollar. So it's around 130 right now is where we're trading. If we get above this 132.60 level, that would mean that Canada's got some problems. That means that the value of your Canadian dollars are going to be less than the US dollar, and that would be rather tough for those folks, I would think. The gold, I still think we've got a chance in gold. The $64 question, I'll bring this up to you just to show you, what we're looking at here in the gold market, because the $64 question is, if you look at the right-hand side over here on the gold here, as you can see the beautiful cycle that's there and everything. I mean, this thing is so symmetrical, it's just unbelievable. And here we are, but the problem is, look at the difference between those cycle lows, folks. Go back to the far left of the chart. Look at that December of 2016 low. Look at the December of 2017. Look at the July of 2016 move. I mean, look how they came out of there. They came out of there like rocket ships. What are we doing? We're sitting here, Dan. We're waiting in, knee-deep water with hip boots. I mean, come on, folks. This thing ought to be coming out of here like a rocket ship, and it's not. And that's the concern that I have. That could lead to high translation, and that means it could come down, and we could come all the way down to that 1200 level, which I think would be a big washout, but we'll see if what's going on. I'm a little tired, folks. I still have jet lag, so bear with me here. As we go through here. I'll be relieved here in a few minutes by Bill Koval of Trading Analytics, so you won't have to put up with me any longer. The euro is in this nice trading range here between 119 and change and 115, and we're going to see what it does here. But the dollar is still, very, very overbought. Boy, Larry, oh boy, I'm going to be getting one email from Canada, I know for sure. Hold on one second here, and I want to bring up this US dollar chart here to show you where we are. This is the weekly chart, and as you can see, we were up 8 weeks, and then we had the first correction back. So we would be normally looking at support to come in here to 382, which would be at 92.50. We're trading at 93.66 this morning. So if we get down to this 92.60 level, then that's something that we want to be watching possibly, because we did take out the highs of the year on this last run when we got up to a little above 94, above 95. And so that's what we're keeping an eye on here. So it's very, very important to keep I'm going a little too fast, Marshall, you're right. Oh boy, it's not easy to speak. In fact, I'm thinking, here's my 17-year-old grandson in front of 3,500 people. I think he would have ordinarily been scared to death. and he had those folks eating out of the palm of his hands. I mean, he was getting tremendous laughter, and then he got a standing ovation. Oh, I have never been that proud. Wow, it was just really, really exciting. Okay, let's move on to the next one. Oh my gosh, the break is coming up already. Hold on, I want to cover one more, and that is the IWM here, because this thing has been off to the races, and I'm not even sure it's going to stop where it is right now, but we've made some double ABCD patterns up here at the 1.27, so we will have some type of, some resistance coming in here, but from what level, I'm not quite sure. But those are the ones that we're watching. I can't cover the beans today, but we have Bill Koval of Trading Analytics on in just about 5 minutes. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've got Bill Koval of Trading Analytics out of Scottsdale, Arizona. Bill, are you there?
Yes, Larry, I am. How's my voice coming?
It's breaking up a little bit, but I think it's okay. Let's hope it is. If not, we'll have to work out something else. But so far, it's pretty good. I want to give you a great kudo because your new trading service is doing really great. We're going to start out with the Treasury bonds and the dollar index today.
Yes, exactly. Al said you got the slide up, the first one.
Yes, we've got the first slide up. When you're ready to put the second one up, let me know and I'll put it up.
Sure. The first slide is looking at the dollar and T-bonds on a weekly frame. Actually, they go back several years now. Not several years, like a year and a half or more, back to the peak that we saw in both of them in 2016. And so I want to make a couple points on this, and then we'll get to the next slide. The first point is that, as you know, the dollar and bonds are at times correlated. In other words, they can move, in the same direction, and it's shown here for some time. Right now, I think they're not quite as correlated, but I think they're holding up fairly well. What we're showing here with the new trend line I developed is that both of them are actually in a downtrend at the moment, and the dollar signaled that down move much before the bonds did. Let's see, what are we looking at?
Hey, Bill, could you take your, do you have your phone on speaker by any chance?
No, I've got a headset, but I can switch it to speaker. That might even be better.
I don't know. It just turned better just now, whatever you did after you got off that headset, because it sounded a little clearer. But try it without the headset just to see what it's like.
Okay, hold on. I'll try it. Does that sound any better, Larry?
Yes, that's much better, Bill. Go continue, please.
Okay, sure. So the dollar signaled this big downtrend earlier than. Well, let me see here. I'm getting my slides mixed up. The downtrend on the bonds started in around June of 16, and in the dollar, it started in August of 17. So that was just the opposite of what I indicated before. The bonds were actually the first to roll over. And in that connection, I not long after that roll, I was listening to a webinar replay that you had done with Futures IO, where I was astounded, but you picked that top, and I'm kind of wondering, and probably your listeners are, what were the couple key things that you saw at that time that enabled you to do that?
Well, it was basically those double 1.618 expansions of previous high that made a 3 drive to a top pattern. Thanks for bringing that up. That was the one time I was right in 2017, but it did make a really nice high there, and I think that's the high that we'll ever see in our lifetimes. But we're a little older than most folks, but I don't think we're going to see interest rates down near those levels of quantitative easing again. Bill, I wanted to ask you, the next one is about the E-mini S&P. Everybody has a great interest in that. What are you seeing here, my friend?
Well, we can skip to the 2A slide, which is the long-term weekly on the ES. There, our trend line says it's still green, so it still shows an uptrend. Also on that slide is the 50-week moving average, comparable to, of course, the 200-day. Now, there isn't any signs of cracks in it, but it looks like it's slowing down. The rise is slowing down, and I from the shorter-term charts, the daily charts that I'm looking at, it's rolling over a little bit there. So, but I'm not willing to predict that it's going to roll over yet. There's still plenty of people lots of money that believe it's going higher. So
That's the chart on the 2A chart of the E-mini, the smaller time frame?
That's the 2A is a larger time frame. The 2B is the smaller one.
Okay, good.
Now,
Okay,
the smaller one is actually there merely to show how, in granular fashion, this trend line signals the turns ahead of time. This is the S&P back in 2016. It's at roughly the 1800 level there, and this indicator signaled the turn ahead of time, and in particular, it's so great because what it does is you see the green line changing to green, trend line changing to green, and then you actually have time there to buy at a lower price. So it alerts you to it, and there the volume line helps you nail that low. From that low to the next recovery high on the right side of the chart is like a $15,000 move in like 4 or 5 months.
Yeah, those are monster moves. You know, Bill, the one that I really enjoyed looking at, of course, I like shorter term trading, but you've really did a great job with this chart here on the September bonds using a 20-minute chart. This was very indicative of what looks like a double top, and then what are you seeing here in the bonds? You got this gold. Could you tell us what those gold arrows are pointing to?
The gold arrows are pointing to the buy signal and the sell signal. Yes.
Mm-hmm. Okay. Well, those are pretty good. Now, those are what you stay long until the gold till the arrows change, no matter what. That you just wait till that occurs.
Yeah. I mean, they're very steady and seemingly very accurate. I developed these about 3 months ago or so, and I'm still working with them. But they've proven very valuable. And back on the ES or forward on the ES slide, the long one, you don't need to go there yet. Well, I'll still cover this one a moment, but. The 50-week moving average on that one, you can see how jiggly it is, and this line called a turn a little bit before, and there was, you don't have to worry about those retraces in a sense until the trend line says it's going to change. Why you can pretty much put money on that.
Okay, great. Why don't you stay with us, and we'll come back. We'll cover the crude oil.
Sure.
Okay, thanks. Bill Koval of Trading Analytics.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back talking with Bill Koval of Trading Analytics. Bill, let's take a look here at this crude oil that you're looking at. You want to tell us what you're seeing here?
Sure. Larry, if you don't mind me injecting, you asked the question about, how I see T-bonds. Let me make a comment on that, and then we'll go to the crude. Is that all right?
Sure, let's do. Yeah, go right ahead.
Yeah. The shorter term frames, daily and intraday, on both of those, the dollar and bonds, they're in downtrends, definitely, but they seem to be kind of consolidating, if you will. Bank of America just was out yesterday saying there's more dollar pain ahead, down to the 92 level, and then a rally. They see a head and shoulders pattern forming, and which ultimately longer term may send the dollar back up to 100. So I'm not looking out that far, but I do see a reason why here in coming weeks why we may see both of those firm up a little bit. Now, as for crude oil, the longer term trends are still doing well. We're showing here the daily on the left and the 90-minute on the right. The purpose of the 90-minute on the right, again, is just to show how great that trend line is, how it shows the top before it actually turns, and it shows the bottom happening before it actually completes. So very, very good in terms of timing. And the yellow volume line helps to reinforce, where those tops and bottoms are.
Mm-hmm.
So,
okay. Listen, if the folks posted the information on how the folks can reach you with your email address, you'd be happy enough to send them a complimentary copy of your letter and stuff, because you cover a lot of things in that I think that they might have an interest in. So the best way to reach you is through your email address. You want to tell the folks that are not in the den that are listening what the email address is?
Sure. Yeah, Larry. I'm going to send the slides along to them as well, anyone who signs up for the free newsletter.
Okay.
And they can do that in two ways. They can send an email to mail@futures911.com, mm-hmm. or they can go to the website, which is futures911.com, and there is a form box there where they can enter their information and send it along as well. So either way works, and we'd glad to give them a lot more information as a result.
Well, listen, I want to thank you for joining us, my friend, and we'll have you on again soon. So have a wonderful summer. Stay cool up there, because I know it gets a little hot up there in that Phoenix area. So thanks again, Bill. You're doing great work. Keep it up, buddy. You're doing great. You should be proud of yourself.
Hey, thanks very much. I appreciate it.
You bet. That was Bill Koval of Trading Analytics, folks. Okay, we're going to talk just a little bit more about that gold market because people have asked me questions about that cycle low. All I was referring to was the fact that the cycle low has not exploded as it has out of the other cycles that were there. That's the thing that really is surprising to me. That doesn't mean it can't at any time, but the question that I had was, if you look at that, the 2016, 2017, and here we are, May 2018, this is the one that's the slowest. And I'm a little concerned that we had those triple tops up there, up around that 1365. But folks, if we ever get above 1365, that's a long way to go. Someone's asked me the question where my grandson sold his gold, and it was when we thought we had enough for him to go to college wherever he wanted to go, and so now he's got that, and he said he ain't going to spend it. It's what he told me. He didn't use the word ain't, of course, but anyway, I was very proud of him. He's a very level-headed kid. Let's move on to the next one here, and that's that crude oil. Crude oil is really interesting, folks, because we held some really major support down there. Let's just bring this up here so we can take a quick look at it. And you'll notice here that we stopped right at the $65 a barrel. $64 a barrel. That was a 78% retracement of the low that we made back in March, and it was a 50% retracement of the low we made in February. Now, what we're looking for now is a potential rally of about $2.50 a barrel, taking you up to a 382 retracement up there around that 67.50 level. And if we get that, then that would be a very low-risk shorting opportunity if it lines up that way. Now, whether it's going to do that or not, I'm not really sure. So we'll have to watch it very, very closely. That's the key of as we're looking at some of these things today. So I think it's rather important to watch that. Regarding the silver, I just wanted to show you the silver because silver's been acting really good, folks. We had a really nice move in silver last night, and it's continuing. We're above the 78% level, and if we can get much higher today, just by a little bit, we got a chance to run $1 an ounce really quickly up here to this $18 an ounce level because we've got really nice bottoms all the way back in July. You see that beautiful head and shoulders pattern. It's as perfectly symmetrical as you could ask for. The right shoulder is exactly the same as the left shoulder, and it's the distance between the shoulder and the head and the head and the shoulder are all the same, and that's the definition that Dr. Andrew Lowe used in his book, the non-random walk down Wall Street, to define head and shoulders pattern. So that's a perfect one. And that ABCD swing takes you all the way up to $19. That's that 1.618 expansion. So all we need now is a little bit move above 1710 or something, and we hit 1695, I believe, earlier. I don't know where it's trading now, but we still got a chance on that. So it looked very, very interesting if it can do that. The only thing that's troubling to me is the fact that gold didn't come screaming out here, and that could be just an anomaly of the market. We haven't had any big changes in open interest. There's basically a lack of interest in the gold. With all, whether volatility will bring up here somewhere, I don't know, but that's primarily, what we're keeping an eye on. The thing that I think is the most important is the fact that all those big stocks that we looked at, the FANG stocks plus, some of the others, Boeing and United Health, and I put United Health because that's the most expensive stock in the Dow now, and I believe it is. Okay, Tucker, I don't know if the Fed is affecting the gold or not. I don't believe that stuff. I believe the markets are free. They can affect them for a little bit of time, but no in the foreign currency, nobody's got enough money to play with those things. But gold, you can do that because gold's that's not a. Hey, look, Bitcoin when it got to $19,000 a share, folks. Do you know that was worth the value of all the gold that's supposed to be in Fort Knox? That's a lot of gold. So now Bitcoin is broken. This is one I wanted to discuss too. Let's just bring this up here because this was a real interesting one. Oh, Larry, where is the Bitcoin? I just did it because it was a very important one to take a look at. There it is. Just give me it up here. And this was a real key here because we have broken pretty good here last night. In fact, most of the trading on this Bitcoin happens on Saturday and Sunday when people are home. But look at the shallow rally that occurred, folks, from the end of May we had about a 12 days in there. It was actually, I was looking at eight trading days, but look at the big move down, and it's breaking below the 78% level. Hey, looks like $4,000 a share is coming in Bitcoin. That's what it looks like. I don't know if it's going to happen, but that's what this looks like. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're having a big sell-off in the grains today. This is a far distance from when we were having that weather problem, when we were selling those puppies up there at that 3 drive to a top pattern. We really want to watch this, folks. We've got a full moon coming in here on Wednesday. We're going to have Norman, we call it by the minute, Winsky is going to be on for his update of what's going to happen with key times. He's going to give us a cameo appearance tomorrow, and then we're going to have him on the show on Wednesday. Tomorrow we're going to have Hema Reddy of Skinny with the Skinny on the E-Mini. And she's going to be talking to us about a new ebook that she's got available. So we'll have those folks on to take a look at it. But we really want to watch these grains, folks, because you want to sell them when they're yelling and buy them when they're crying. And they're crying now. And so we want to pay really close attention in here, folks. I think this is a chance that could really be very good. And the word there, the key word there, of course, is chance. That's the main thing that we want to be looking at. But if you remember, here where we were just a few weeks ago, back when we had that monster triple top up there. You'll notice that the weather was absolutely scorching hot there in May at the Indianapolis 500 at 97-degree temperature, and it couldn't get above 1066. And if we get above 1066 now, we are off to the races. But we are approaching the 78% level. We're breaking today. We're down another 10 cents. So we're approaching the lows that we made back in January. I'd like to see those taken out. That's only 968. If we get those taken out on Wednesday, that might be the old proverbial Christmas tree trade. You know, you don't get the lights light up very often, but it'll be low risk at that point. You certainly be better to buying them at 966 than at 1066. That's the way it would look like, but we'll pay attention to it because the crop is in good shape. The weather's looking really good now, just like it was looking bad on May 14th. So those are the ones that we want to look at. So a lot of things will be happening. Everybody's got their eye on the Piraeus and the summit there. So we'll see. 877-927-6648. May God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.